Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far, 5 problems have completed on accounting equation. In this video, 2 more problems, 6th and 7th, I'm going to explain. See, in accounting, the first step is recording the transactions. The transactions can be recorded either by the old traditional method, by debiting one account and crediting another account, or by the modern method where every transaction will affect assets, capital and liabilities. If any transaction is there, first effect will be on asset, the second effect will be on capital, or one effect on asset, the other effect on capital. In this way we can be able to record the transactions. Already 5 problems I have explained in detail about accounting equation. So if you have not watched the earlier videos, I suggest you go to the playlist of my channel. Select the subject Accounting for CA Foundation. Select the theory video of accounting equation. Be perfect about the concept, then you can enjoy learning how to record the transaction by accounting equation. So before starting the problems, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep the problem ready. Take the screenshot of the points, then I'll explain every problem in detail. Now, see the 6th problem. Problem number 6. Following is the information provided by Mr. Gopi pertaining to the year ended 31st March 2022. Find the unknowns showing computation to support your answer. So, in this table, the values are given: machinery 12 lakh, accounts payable 1 lakh, inventory 60,000, total liabilities including capital 14 lakh 15,000. Cash A. This A is the unknown value. We have to find out how much is the cash. Bank balance 80,000. Trade receivable B. We have to find out B. Loans C. We have to find out C. And closing capital D. We have to calculate. So A, B, C, D are missing figures that we have to find out by using the other information. Opening capital 10 lakh. Loss incurred during the year 35,000. Capital introduced during the year 1 lakh. Additional information: during the year sales of rupees 15 lakh 55,000 was made, of which 15 lakh rupees have been received. So total sales 15 lakh 55,000, out of which 15 lakh rupees are received. So how much are not received? 15 lakh 55,000 minus 15 lakh. So 55,000 rupees are the account receivable. So trade receivable, directly it is given trade receivable B item. Orally we can be able to find out 15 lakh 55 minus 15 lakh will get 55,000. So trade receivable are 55,000. What are trade receivable? Debtors. The amount due from credit customers, that is called trade receivable. That's all. Now one by one we calculate the missing figures. Now Mr. Gopi, total sales are 15 lakh 55,000 given in the last line. From that deduct cash received. The cash received are 15 lakh. So trade receivable 55,000. B answer we got 55,000. What is B? Trade receivable. That's it. Now opening capital is given in the problem 10 lakh. To opening capital we add further capital introduced during the year. So at the beginning of the year the capital was 10 lakh. During the year more capital was introduced by the owner 1 lakh. So total capital is 11 lakh. And remember, if there is a profit, the profit will be added to capital. If there is a loss, the loss will be deducted from capital. So here it is given loss incurred during the year 35,000. So deduct 35,000. So 11 lakh minus 35,000, you will get 10 lakh 65,000. This is the closing capital. So how to get closing capital? Opening capital, add further capital introduced minus loss incurred. If there would be profit, we would have added the profit. But here there is a loss. So deduct, subtract loss incurred. We'll get the closing capital. So we got D point. We got B, that is trade receivable. D, that is closing capital, 10 lakh 65,000. Now, total liabilities including capital. So liabilities plus capital is nothing but assets. Accounting equation says all the assets is equal to capital plus liabilities. So here total of all liabilities including capital 14,15,000. From this closing capital, how much is the closing capital? Just now we got 10,65,000. From total liabilities, deduct the capital, we'll get that total liabilities are 3,50,000. Excluding capital. Excluding capital, the total liabilities are 3,50,000. 3,50,000. Now total assets is equal to capital plus liability. Now A is the total assets. Capital is 10,65,000. Liabilities are 3,50,000. So 14,15,000 is the total assets. Simply we can say total assets is equal to liabilities plus capital. So here liabilities plus capital 14,15,000. Now from total assets, we deduct all assets except cash. One asset, cash, is not given. Remaining all assets are given. So from the total assets 14,50,000 minus machinery 12 lakh minus inventory 60,000 minus bank balance 80,000 minus trade receivable 55,000. So if you deduct all the assets from 14,15,000, 20,000 is remaining. That 20,000 is the cash. So A is the cash. We got A value. Now lastly, total liabilities are 3,50,000. Out of the total liabilities, trade payable or account payable is 1 lakh. Actually, two liabilities are there. Trade payable and loan. Loan is unknown. We have to find out the amount of loan. So from the total liabilities, deduct the accounts payable 1 lakh. So 2,50,000 is the loan amount, that is C. So we got A, B, C, D. What is A? Cash. We got the cash value 20,000. Here we got cash 20,000. B is nothing but trade receivable. We got the trade receivable 55,000. C point is loan. We got the loan value 2,50,000. And D value is the closing capital. The closing capital we got 10,65,000. All the unknown variables we have calculated. So this is the end of the problem 6th. Now I am coming to the 7th problem. Prepare an accounting equation from the following transaction in the books of Mr. X for January 2019. So here some transactions are given for the month of January, and we have to record the transactions according to accounting equation method. So here Mr. X analyzing the transactions as per accounting equation method. So first, date, transaction, assets, liabilities, capital. So assets is nothing but liabilities plus capital. Liabilities plus capital is equal to assets. That is accounting equation. Now first transaction, January 1st. Invested capital in the firm 20,000. The owner, Mr. X, the owner, Mr. X, invested 20,000 rupees as capital. When the owner invests the money in the business, cash is coming in. When cash comes in, the assets will increase. So write 20,000 in assets column. Now this 20,000 is invested by the owner. When the owner invests the money, it is called capital. So here capital 20,000. There are no liabilities. The owner simply invested 20,000 in the capital. Business received 20,000, so assets increased, and the capital increased by 20,000. So equation, assets is equal to liabilities plus capital. There is no liability. So assets is equal to capital. That's it. Second transaction. Purchased goods on credit from Das and Company for 2,000. Purchased goods on credit. That means a liability. We have not paid the amount. We have purchased the goods. When goods are purchased, inventory is coming in. So assets increased. So purchased goods on credit from Das for rupees 2,000. So assets are increasing by 2,000. At the same time, Das is a creditor and creditor is a liability. So liability increased by 2,000. There is no effect on capital. Our assets are increasing by 2,000. Our liability is increasing by 2,000. Because in future we have to pay to Das. So now total 20,000 plus 2,000, 22,000. 0 plus 2000, 2000, 20,000 plus 0, 20,000. Now you can check assets is equal to liabilities plus capital. 2000 plus 20,000 is 22,000. Accounting equation satisfied. Next, 4th January. Bought plant for cash 8,000. Bought plant for cash. That means plant is coming in, cash is going out. Both plant and cash, both are assets. Plant as well as cash, both are assets. So one asset is coming in, another asset is going out. So plus 8,000 minus 8,000. Bought plant for cash plus 8,000 denotes plant is coming in, and minus 8,000 cash is going out. So 22,000 plus 8,000 minus 8,000, 22,000 same. Here 2,000, here 20,000. Again, assets is equal to liabilities plus capital. Accounting equation satisfied. The effect will be one asset increases, the other asset decreases. Next, 8th Jan. Purchased goods for cash. Again, purchased goods. The goods are coming in and cash is going out. So one asset increasing, another asset decreasing. So again same, 4,000 is added and 4,000 is subtracted. Purchased goods for cash plus 4,000, goods are coming in, minus 4,000, cash is going out. So ultimately 22,000 plus 4,000 minus 4,000, same 22,000. No change in assets. 2,000 liability, 20,000 capital. Again 22,000 is equal to 2,000 plus 20,000. Satisfied. Next, 12th Jan. Sold goods for cash. Cost rupees 4,000 plus profit 2,000. Total 6,000. Sold goods for cash. The cost is 4,000. Actually, when we sell the goods for cash, we are getting cash. How much? 6,000. But goods are going out. What is the cost of the goods? 4,000. That means one asset is increasing, that is cash is coming in 6,000. So plus 6,000. Goods are going out. How much goods are going out? 4,000. So our asset is increasing by 6,000 and decreasing by 4,000. So effect on assets. Now you can see here. Sold goods for cash, cost 4,000, profit 2,000, total 6,000. So plus 6,000 because we are getting cash 6,000. So plus 6,000. Goods are going out. The cost of the goods is 4,000 minus 4,000. But 2,000 is the profit. When we earn the profit, our capital will increase. Or profit will be added to capital. So that profit will be added to capital here, plus 2,000. The profit will be added to capital. Now you can see 22,000 plus 6,000 minus 4,000, 24,000. Now you can see 20,000 plus 2,000, 22,000. Now confirm assets is equal to liabilities plus capital. 2,000 plus 22,000 is 24,000. Satisfied. Next, 18th. Paid to Das and Company in cash 1,000. Paid to Das and Company. Who is Das and Company? A creditor, supplier, a liability. So 1,000 rupees are paid for liability. So what will happen? Our assets are decreasing by 1,000 and liability is also decreasing by 1,000. Actually, we have to pay to Das. How much? We have to pay to Das here 2,000. Out of 2,000, we are paying 1,000 rupees. So our liability is decreasing. So paid to Das and Company in cash 1,000. Our cash is decreasing by 1,000. So minus 1,000. The liability is also decreasing by 1,000. We are paying to Das. So Das balance is decreasing. So 24 minus 1, 23. 2,000 minus 1,000, 1,000. Now you can see 1,000 plus 22,000, 23,000. Satisfied. Next. 22nd Jan. Received from B. Banerjee 300. Received from B. Banerjee. Who is this B. Banerjee? Maybe a customer, credit customer. From credit customer we have received. Actually, credit customer Banerjee we have received 300. So what will happen? Our cash is increasing and customer's balance is decreasing. received from B Banerjee. Now this equation I have carried down here, 23,000, 1,000, 22,000, same thing, 23, 1, 22. Received from B Banerjee 300. So actually we have to receive 300 rupees from the customer. Our cash is increasing and debtors are decreasing. One asset increases, the other asset decreases. So plus 3,000 minus 3,000, you will get same 23,000. Then 1,000, 22,000. 25th, paid salary 6,000. When we pay the salary, our cash is decreasing, assets are decreasing. So here how much salary? 6,000. So asset side minus 6,000. Whenever expenses are paid, it reduces the profit. Reduces the profit means reducing the capital. So remember one point, when expenses are incurred, the capital will decrease. Expenses are incurred, capital will decrease. When income is received, capital will increase. That point to remember. Salary is an expense. When salary is paid, the capital will decrease. So here minus 6,000, here also minus 6,000 from capital deduct. So 23 minus 6, you get 17,000. This 1,000. 22 minus 6, that is 16,000. Now assets is equal to liabilities plus capital, 1,000 plus 16,000, 17,000. Next, 30th. Received interest 5,000. When we receive the interest, it's an income. We are receiving the interest. So our asset is increasing. Asset is increasing by 5,000. Interest is an income. The income will be added to capital. So this interest received will be added to capital. So 17,000 plus 5,000, 22,000. 16,000 plus 5,000, 21,000. So 22,000 is equal to 1,000 plus 21,000. Equation satisfied. Last, paid wages 3,000. When wages are paid, it's an expense. Our cash is decreasing. Assets are decreasing. So minus 3,000. And expense will be deducted from capital. Because as we spend the money for expenses, our profitability will decrease. When profit decreases, the capital will decrease. So here minus 3,000. So 22 minus 3, 19,000. This 1,000. 21 minus 3, 18,000. So 19,000 is equal to 1,000 plus 18,000. That is the new equation. That's all. So in this video, I have completed two problems, 6th and 7th. Inshallah, we will continue the next problem in the next video. So if you are satisfied, give a like to the video, share my channel among your friends, among your group, so that more students can watch the video and enhance the knowledge. And clear the CA foundation, CMA foundation or CS foundation, the first attempt itself. So all these videos are very, very important. Don't skip in between. Watch all the videos one after the other. So inshallah, we'll continue the next problem in the next video.